All right, let's get right into it. Think about the investment world today. There's this massive wall, right? On one side, you've got the private markets. This is where the magic happens, where companies are born, where they have that explosive growth. And then, on the other side, there's the public market. That's where most of us are allowed to play, but usually long after the real party is over. So today, we're talking about that wall and a project that's trying to blast a hole right through it. You know, this quote just hits the nail on the head. We've all heard the advice, just buy great companies when they IPO. But that feels, well, it feels pretty useless now. It's exactly like this says. You're showing up for the last kilometer of a marathon and wondering why all the early runners, the insiders, have already collected their medals. The thing is, you're not just late to the party by chance. The system is designed to make you late. So that really begs the question, doesn't it? If all the real value, all that insane growth, is happening in those first 40 kilometers, who's handing out the invitations to that part of the race? Who gets to be there when the stakes are at their highest and, frankly, the rewards are at their biggest? This is way more than just about money. It's about access. And this brings us to what's been called the velvet rope economy, is a perfect name for it. The idea is that the private investment world isn't some meritocracy where the best ideas win. No, it's more like an exclusive social club. It runs on who you know, warm intros, and being in the right rooms that most of us don't even know exist. Okay, this slide just lays it out, plain and simple. Look at the two worlds. On the left, you have the private market. The inner circle gets in early during that exponential growth phase. That's the real marathon. And on the right, the public market. The source material calls it liquidity theater, which is just perfect. It's where everyone else gets to come in, but only after the main show is pretty much over. And here's the crazy part. This whole problem is getting worse, not better. Just look at this timeline. Back in the early 2000s, a company would go public after about 4 years. Now, it's more like 10 to 12 years. Think about that. That's an entire decade of wealth creation, of compounding value that is completely locked away from the public. The scale of this is it's staggering. We're talking about an estimated $60 trillion in retail capital that's structurally, by design, showing up late. This isn't some small crack in the system. It's a massive design flaw that keeps everyday investors out of the game when it matters most.
Now, you're probably thinking, hold on, aren't there platforms out there trying to fix this? And yeah, you're right, there are. But the problem is, a lot of these so-called fixes just create an illusion of access, and they often come with some pretty nasty hidden traps for the average person.
One of the key things you have to watch out for is this idea of camouflaged volatility. See, private investments are often pitched as being more stable because you don't see the price bouncing around every single day. But that risk, it doesn't just disappear, it just hides. It shows up later as gated redemptions, which is a fancy way of saying, sorry, you can't get your money out, or valuations that are just made up by a manager, not decided by the market.
And what's even worse is what some research calls a two-menu system. Basically, the wealthier, more connected clients, they get the A-list menu with better deals and better terms. Retail investors, well, we often get the other menu, the one with higher fees and a lot more compromises. It's the same old velvet rope, just with a slick new website.
Okay, so this is where IPO Genie comes into the story. Their entire argument is that you can't fix this by just building a pretty app on top of a fundamentally broken system. You have to go deeper. You have to build a whole new set of rails. So let's take a look at their blueprint for how to actually do that. It really all starts with where the deals come from. Instead of just relying on the same old country club connections, they're building this four-pronged engine. So you've got your traditional vetted deals from VCs, sure, but then you add an AI that's constantly scanning for what they call missed alpha. You know, those brilliant founders that the usual suspects just ignore. Then you layer on a direct incubator for founders to apply and a global network of scouts. The goal is to get away from the spray and pray model and build a smaller but much higher quality list of opportunities. Now, this next part is really, really clever. The legal architecture is key. There's a single regulated fund that does all the investing on paper, dealing with all the headaches of compliance. But then global users, people like you and me, can get economic exposure to those same deals through a totally separate tokenized layer. It's this two-layer approach, this separation, that could finally unlock global access while still working with the rules, not just pretending they don't matter. So how do you stop this new system from just becoming another gatekeeper? Well, the whole philosophy is built around governance that has real, actual consequences. The idea is pretty simple, really.
When your decisions have financial weight, when bad actors are actually punished, you naturally create a system where expertise is rewarded and it becomes much, much harder to corrupt or sabotage. So, what's the fuel for this whole engine? Well, that's where the platform's native token, which is called $IPO, comes in. It's designed from the ground up to be the core mechanism for access, for governance, and for making sure everyone's incentives are pointed in the same direction. It's not just another coin to speculate on.
You can actually see how those incentives are baked in just by looking at the token allocation. But the part I want you to notice is the team's slice, just 5%, and it's locked for 2 years, then it vests over another year. That's a huge signal. It tells you they're in this for the long haul, not for a quick payday. Okay, so the platform uses a tier system. And I know what you might be thinking. Oh, great, here we go again, another velvet rope. But the argument here is that this is different. It's a transparent, rule-based way to solve a very real problem. How do you fairly distribute a limited number of high-quality deals? Instead of access being based on who you know, it's programmatic, it's predictable. It's based on how much you've aligned yourself with the network by holding the token. So, at the end of the day, what does all this mean for an actual investor? Well, it means way lower minimums, like around $100. It means transparency on the blockchain so you can see what's going on. It's designed to create a liquid secondary market, and the staking has real utility. It's not just for earning yield. It's a package designed to solve all the big headaches you find on other platforms. All right, let's zoom out for a second. Let's pull back from the features and the tokens and look at the grand vision here. Because this isn't really about building just another investment app. It's about fundamentally challenging the way capital gets allocated in the first place. The whole mission is to transform capital allocation from a social club into a true discovery engine. Just imagine a world where money flows to the best ideas, not just the best connected founders. A world where it doesn't matter who you are or where you live. That's the leap from a system based on networks to one based on merit. And the stakes, they couldn't be higher. There are almost 8 billion people on this planet. That's an unimaginable pool of talent, of weird insights, of brilliant ideas. Any system that only listens to a tiny self-promoting fraction of that, it's not just unfair, it's economically insane. It's wasting human potential on a planetary scale. And that brings us right back to the beginning, to the core thesis of this whole thing. The right to be early is the point. The goal here is to take this idea of insider access and drag it out of the shadows, to turn it from a privilege you're born with into something you can earn through a transparent, open, rule-based system. And so I'll leave you with this final question to think about. Forget about investing for a minute. Just think about what it means for human progress. What kind of future do we build when capital finally starts flowing to the best ideas, not just the founders with the best connections? What kind of world gets built then? That's the real question.